In this video, we are going to automate the sensitivity analysis on enterprise value to NPV10 of gold miners. I want to automate this chart here. And this chart shows the upside of gold miners at a certain gold price based on the EV to NPV ratio. As the gold price goes up, then the EV to NPV goes down, right? And as it goes below 1, then it becomes undervalued, and then you have upsides in that stock. I want to automate this. I want to just click on refresh and every day have an updated chart, because these charts are manually created at different gold prices, so this is not automated yet. I want to automate this. Okay, so I have started to create this here, and as you see from the chart here, you can see that the upside is a linear chart. So this is just a linear chart. I just need 2 data points. For example, 2000 and 3000 gold. Okay, so I just need 2 data points, and I'm going to choose 2000 and 3000. Let's automate monument mining in this video. So what are we going to do? We go to our monument mining chart. This is my master file for NPV enterprise value calculation. So we are going to copy this. We are going to copy this somewhere here below. And then we are going to update this for 2000 gold, and then another one for 3000 gold. So yeah, let's do it. So the enterprise value seems to be using the charts from here. That's good. Yeah, but I want to have this as a master file. So this should refer to this chart. This should be this, right? And we just do it like this. So as the enterprise value changes and the market cap changes and the share price changes, this whole row will change. That's what I want. Revenue. Yeah, we just refer to the chart above. But actually, that's not possible, because here we will use another gold price. In this case, it's 2000 gold for the first data point. So we actually need to use these numbers. So revenue will not change. However, this formula here could change if they do the BIOX or not in the BIOX. That's a difficult one. But I cannot just refer to the other chart, because the revenue would change with another gold price. So let's just do it like this. Costs are using these numbers, okay. Production, yeah, for production I would refer to the master chart, because this can change. Okay, so for production, I would refer to the master chart. All-in sustaining cost as well, we will refer to the master chart because that can change in function of time per quarter. Gold price is 2000. So this is the chart for 2000. US dollar to US dollar, that's not really important, but let's just refer to the master chart just in case. Capex, yeah, Capex should refer to the master chart. I'll just do this. Okay. Corporate SG&A, just the same, master chart. We will update our charts in the master chart. Interest payments, yes, just refer to the master chart. Depreciation, the same, master chart. Taxes, yes, master chart, preferably in percentage. And net income, okay, so this we cannot refer to the master chart because it refers to this revenue and costs that is dependent on gold price. So this should be like this, okay? And then Murchison, okay, this can be referring to master chart. Mangapore royalty, yes, master chart. And then cash flow using these net incomes, yes, that's good. This will be using these numbers. Murchison is master chart. I will give 20 million to the Murchison asset. Could change in time. And then EV to free cash flow is this divided by this, okay? And then NPV 10 using these net incomes plus Murchison, that's also good. So here you see NPV is 122 million. And here it's 150 million. That's possible because here the gold price is higher. And here it's lower. So this is lower. Share count. Do I actually use it? Actually not, because I just refer to the master chart. I really don't need this. Does it change anything? I don't think so. No, it doesn't change anything. So concentrate payability. Where is this being used? I think it was used here. But this is using F60. So F60 is this one. So I don't really need this one here. Delete. And then EV to NPV is EV to NPV. So this is the NPV model for 2000 gold. Okay. Now we need the NPV model for 3000 gold. NPV calculation for 2000 gold. And now we need the NPV model for 3000 gold. 3000 gold. Okay, so this is referring to the wrong thing here, so we need to do it back like this and just update everything. Revenue is correct, I think. Costs is correct. Production should be referring to the master chart. Like this. Only sustaining cost the same. There's quite a bit of work to automate this. This is 3000. USD should be this. You think there's that everything is going to come to you without any work? I don't think so. So we do need to do some work to get this automated in percentage. Interest. Okay, so why is interest 0? Okay, it's 0. Fee for Murchison. Megapur. Murchison. And there we have it. We have this plus 20 million is 280 million. Okay. That's it. If we use 2000 gold here, it should be the same, 0.29. Let's check. Yes, 0.29. So it works. One last check if we do the same here. 2000 gold. Yeah, 0.29, so it works out. So we now have two data points, 2000 and 3000 gold. Okay, these two data points, which can change in function of time because the share price changes. Now we input this in here. This is a 2000 gold EV to NPV, 2000 gold EV to NPV, like this. And for 3000 gold, this. Now what's the EV? EV is really easy. We just refer to the master chart. I could also just refer to this here. That's also the EV in US dollars. EV in US dollars times, of course, million. Okay, that's the EV. NPV is calculated automatically with this formula. Market cap is this here times 1 million. And then we have the upside. This is the upside. So in function of gold price, we have our upside. Voila. And we add a trend line forward, backward. Okay. Does this make any sense? I think it makes any sense. Yes, it makes sense. At current gold prices, we have 300% upside. Is that correct? 300% upside? Yes, because we go from 40 to 150, so that's times 4. Yeah, that's times 4, so that's 300% upside. And if we go to 3000, then we have 700% upside. Let's check that. 3000 gold. Then we go from 35 to 280. Is this? Yes, that's 8x. 8 times 35 million is 280 million, and that's here. So that's an 8x at 3000 gold. 8x at 3000 gold is plus 700%. Right? Yes. So this chart works. Now, let's see what happens when. Yes, so let's copy this. And let's see what happens when Monument Mining goes up in price. Let's say Monument Mining tomorrow goes up 50% to 0.17, right? And this is a table that I just can refresh. Just click on refresh button and then this will update. That's the share price, which has now gone up 50%. Let's see what happens with our automated chart. It has updated. So now at 2,200 gold, we now have upside of only 150%. Previously, we had an upside of 300%. So because monument mining has gone up 50%, the upside is only 150%, while before it was an upside of 300%. At 3,000 gold, it had an upside of 700%. Now it only has an upside of 400% because monument mining has gone up 50%. So it works. It works. It has been automated now for monument mining. Let's remove let's update it back. So this, I can just refresh. It will go from the web and it will be updated in a second. Hello. Yes, it has been updated back to 0.12. And it has been fully automated again, and this chart has updated again. So the upside currently is almost 300%. If gold keeps on going up, upside is 400%. Okay, so this was the tutorial on how to automate the upside in gold miners at 10% discount rate. And this is monument mining. I will be adding more miners so that we can compare it. And by one click of the button, we will know the upsides every day. And I'll see you next video. Bye.